Right. Well, it is my great pleasure to be speaking at my first Ethereum conference in a number of years, and excited to see so many fantastic folks in the audience. The first thing, so I'm Mike Dudas. I am currently a venture capitalist, so I invest in startups across the Ethereum, Solana, and many other crypto ecosystems. If I was a world-class founder myself, I probably would not be a venture capitalist, so take everything that I say here with a little bit of a grain of salt. But I have learned, I'm in my 40s, I've learned over the past few decades quite a bit from succeeding decently in building companies, having some failures, and working with incredible founders who have done far better things than I have. So today's conversation is going to be about how to grow a great crypto startup. And the reason is, I have been to a bunch of conferences myself as somebody who is building companies, as somebody who's investing, and a lot of it is theoretical and it's incredible, but I feel like we need more practical advice about what it takes to actually grow a company, because crypto startups are not only, in many cases, companies and protocols, but then also have more complexity even beyond that. So they're actually harder to grow, in my estimation, than traditional startups. Now, the counter to that, or I'm sorry, the benefit is, if you do succeed, the rewards to building a crypto startup are often come faster and are just incredible relative to traditional startups. So, how to grow a great crypto startup. Getting started. So, bottom line, it's everything in this, basically everything in startups, and particularly I think in crypto, is about people. And we see that, right? The people we associate with, the people who identify with us, the people who have sort of shared mission and interest with us, but also the people who have a DNA that is necessary to excel in a world where, for example, much of what many of you are building is open source software. It's very easy in many cases to replicate. It's out there for anybody to see. And the amount of sort of ferocity, drive, sort of animal instinct that you need to have is different than in, hey, guy who's selling SaaS, gal who's selling SaaS, ad tech, you name it. It's just a different, it's both hard tech, but also something that's out there that is replicable, forkable instantly. So you're looking for animals, you're looking for people with resilience, and it's resilience in terms of the technology is going to fail, but also the price might fail if you issue a token. The reception to what you're doing might not meet the market the right way. Frankly, the market might fail, like right when you're creating something awesome. So you have to be extremely resilient. And I really do deeply believe in having more than one founder in any sort of crypto protocol or company. I've done it as just a solo founder, and I burnt out. I started The Block. It's not a technical company, research, media, business, but I burnt out within a couple of years not having a co-founder. It's just such a fast-moving, sort of vicious and intense environment. You need folks around you. You want people who are curious. And so I think, I spend a lot of time on Twitter, and I also don't spend it always in the most constructive way, and I'm the first to admit it. But in private, many of the people I interact with who might be biting or pithy or this or that on Twitter are actually really curious in private. The conversations they're having, they're actually default optimistic. Look for people who, when you ask a question, they're not like, that's dumb, that's silly, like stupid, like what are you doing? Like they're kind of curious like you are. It's just an absolute key characteristic of who you want to invest in and who you want to work with. And they have to care about crypto. I mean, you can't fake it. I've invested in so many companies that, we invested in 2022, in 2023, they pivoted into AI, SaaS, you name it. And it was just crystal clear that these folks were not passionate about crypto. So that's something that you're absolutely looking for. And I think the scope creep that we're getting right now is a lot of folks who say, they're interested in crypto, but to solve this problem. So it's like the stablecoin thing. Hey, I like fintech, and stablecoins are going to solve everything. It could be AI/crypto, and like decentralization is going to allow me to launch a token. Just if you're on those new edge things, just make sure that person, like, have them really explain to you what's important about distributed consensus, what's important about distributed trading, you name it. Willing to say I don't know. Like, dude, I am the dumbest guy in the room probably here, or bottom 10%. In any specific expert field, and I'm willing to say I don't know a lot, and that's how I learn a tremendous amount. And I say a lot of dumb things and learn from those by people correcting. You're looking for people like that as you're building your crypto team, and then you're going to spend a lot of time with these folks. It doesn't matter if it's a Telegram group, if it's your Slack group, if it's your office. You are going to spend so much time. The best teams that I work with as an investor, more so than anything else, because again, it's so tribal. Like 90% of people default think that the thing that you're working on, just because of the category you're in, isn't going to work. I mean, that's intense. So you want to spend time with, you want to be with people that you can spend time with, enjoy, trust in the foxhole when the barbs come. All right, so you got a team, right? That was the last thing. Make something customers want. So I think the idea is less important than the space. Here's where I'll use it. So I've gotten 50 pitches for the next Hyperliquid over the last 50 days, right? And that's a slight exaggeration. But there is something there to, people want to trade assets in new ways with, tighter spreads, better liquidity, instantaneous, different assets, globally permissionless, not subject to the rules of centralized exchanges where maybe I can't withdraw. Like, there's something there. So it's okay if you have an idea in that general space. And then, basically you want to sort of zone in around those ideas. In crypto, through history, the ideas around sort of fame, social, gaming, memes, persona, NFTs, like creativity, or fortune, like, hey, we're trading, we're speculating. Candidly, those are things that have worked. New things may work in the future. They look a little bit less like pure crypto, again, stable coins and RWAs, but targeting fame and fortune, those are good areas to sort of start with, and then think, where is there opportunity in those broad spaces, and then keep it simple. And this has always been my thing. Like, if you pitch and I can't explain it back to myself, I'm not an engineer, and if I spend 10 minutes and I'm still struggling, and by the way, this happens a tremendous amount. I'm definitely not the smartest guy in the room, but I should be able to understand what you're saying after I review it for 30 seconds to 60 seconds and just have a general sense, and often I don't. You're never going to know. Next thing, ship, iterate, repeat. You're not going to know if people want your product. We've backed too many teams that take a year to get the perfect product out, and you're never going to get the perfect product out. And by the time you do, it's going to be on Hyperliquid instead of Solana. Like, meme coins moved. That's just one example. But the point is, you have to get something out there. You have to get people believing that you can ship something that they want to use. And if you don't, they're not going to follow you if things change. Great teams that have done this are like Magic Eden, Tensor, that we've invested in the Solana ecosystem, that sort of move around, change what they're doing, but the product's out there and people follow them. And you don't need to be first. I mean, that's crystal clear. There's like a zillion examples. In fact, sometimes it's a negative to be first. Or if you're first, it takes a lot longer to sort of figure out, hey, what is the path to scaling, which Ethereum is now figuring out in a wonderful way. And that's why I'm at this conference and very excited about it. Be yourself. What do these folks have in common? They're themselves. Like, literally nothing as, they do have some commonalities, but these are extremely different people who are extremely successful. And what I would argue is a relatively tight ecosystem. You have to be authentic. People will sniff out. Like, I promise you, I am passionate right now. Like, if I could stay up here for an hour answering your questions, I would. I care about this stuff. There's authenticity. I'm like, flowing. So that's what you're looking for. And Jen, you don't have to project it, because not everybody has that level of outward nature. But you have to be your authentic self. Find that, be it, don't be afraid of it, and then be able to tell a story. All right. So once you've launched, once you have your idea, the team, you've launched, ride the wave. And dude, we all know this, like waves. And I mean like crashing waves, like you feel like it's glory and then like there's rocks. All right. So we're riding the wave. Where should the headquarters be? So I first gave a similar presentation about 6 months ago, and I think this mattered more than it does today. I would say that you really need to look at, are you going to be regulated? Are you not going to be regulated? Of course that's a spectrum, just like decentralization is. But you kind of know, like, hey, we're going heavily regulated, we're not. And you sort of choose onshore, offshore based on that. And I think once you've chosen offshore, you just have to be in a place where you feel like you can find talent. It could be islands, it could be Malta, it could be Dubai, it could be any number of places in Southeast Asia, it could be you name it, right? The interesting thing is, though, you have to be nimble once you've chosen, okay? We've seen how the Singapore regulatory regime has changed pretty dramatically in the last, 10 days, like 2 weeks? And it's, so the point is, I would say it's really important. Make sure, though, I would say the number one thing, what I've put here, where should that be? It's talent. And then make sure that they're willing to move with you and go with you and be a little nomadic if the regulatory environment changes. Which chain? Well, honestly, these days, I would say that choosing the right chain means choosing a chain that's not a zero, okay? I would say, and I'm not going to name any of them, but there's probably, 8 to 10 L2, L3, L1s that you can launch in where they are sufficiently, they have sufficient liquidity, they have sufficient user base, community where your app can be successful. And I'm speaking sort of apps right now. If you choose one that's not on that list, I mean, you're making a poor choice and like you probably are going to go out of business. But if you choose one of the ones that's sufficient, you can, and by the way, I can privately tell you what that list is in my mind, and you'll get lots of opinions. Just don't choose a chain that's going to send you to zero. And people do that, and it makes me sad. Should I launch now? Always. You are going to run out of money if you don't start to get to any sort of metrics in a 12 to 18 month time period, or you might just miss a cycle. Please, if you're close, launch with a small group of folks, start testing the product. Should you go global? Of course. Like, what is your one advantage, like, among many? It's you can touch anybody, anywhere for very low cost. All right, crypto teams, your network is your net worth. I mean, that's lame, but it's true. So you should spend a tremendous amount of time creating a network, and a lot of that, again, comes from your authenticity, your personality, and finding like-minded people. Once you've found them, really, really lean into your community, okay? Some people, including me, I think at times do it too passionately. Like, you should always be looking to expand the folks that you want to be associated with. Hire for talent. Like, really great, interested engineers who have a curiosity are what you're looking for. And if they care, it's much easier to train them than somebody who's like really high paid, really talented, great resume, but disinterested. And I am like deeply, deeply of the belief, some people disagree, but that you should be hiring full-time people wherever possible and not consultants. I do think if you can find folks willing to do, 4, 6, 8-week trials, awesome, more power to you to figure out if they're the right people. But like you need people who are like bleeding for what you're building. And then, building, everyone's the CEO of their role. Like, I don't have time to manage. Like, I don't think anybody here has time to manage. We're not talking about linear careers. Like, we are literally working in frontier tech where there is not an expert in virtually anything that any of us are doing. And the people who are experts literally are going to change their mind in 6 to 12 months, okay? So let's just get out there. Let's be the CEO. Let's solve the problem. We might not solve it perfectly, and we're going to learn and like form new knowledge in the space. Learn, adapt, fail, and then reward those people. So one thing I do see is this so on a macro level, like, hey, if you take value out, you're extractive, this, that, and the other thing, we need to normalize rewarding the really, really 10x exceptional people in the space. And I'm going to do my best and be very loud when I see, for example, my portfolio companies or entities I know are rewarding great people and they're growing. By the way, did it get hotter in here? Did they like turn off the AC in the last 5 minutes? Like, or am I just like really raising my body temperature? I'm not sure, but it's fun either way. All right, crypto sales and marketing. Market right, the product is the marketing. I mean, that's pretty straightforward. Like, if I put 100K into a money market protocol and I'm earning the promised 8%, and it actually works, and it's better than the 4% I can earn elsewhere, like in 6 months, I'm happy. If there's security issues, if they change, how long my lock is, the staking rules, well, hey, I'm pissed off. So, market through your product first and foremost, make your promises, follow through on them, okay? That should happen through every channel that you're a part of. Use content, but make that content, again, authenticity is the biggest thing. It shouldn't be ChatGPT. It shouldn't be, KOL, Kaido person number 1,000. Like, this stuff's getting too obvious. It's too gross. I would say stay away from that as a core marketing tenet. It's not going to be a long-term winner for you. Find the authentic people. I mean, again, it's lazy for me to say this, but Hyperliquid is a canonical example of finding people who are perfectly incentive aligned, making money, using the protocol, and talking voraciously. That being said, obviously price does lead sentiment and support, and Hyperliquid's sort of been up only. A lot easier to market your product when the price is going up. Keep an eye on what happens if the price goes down on some of these things. Solana, for example, price of Solana, I mean, it hit 250 in February, and it feels like right now it's kind of having the arc that Ethereum has had at different times in its life, where it's like, well, Solana's doing everything wrong. It's down 40%, and frankly, all metrics are actually pretty substantially better on the chain than 12 months ago, but sort of price leads sentiment, and so the example on Ethereum, the example on Solana, is they're both, Ethereum's done a fantastic job of just like crystallizing the message, using all the channels to now get a little more coherent. And Solana is just like, hey, we're just going to keep doing the internet capital markets, boom, 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 boom. You're the PR agency. You can't outsource this stuff. Know the business outcome you're driving with any spend. Honestly, I just don't, it's hard for me to imagine spending a lot. Even like ECC, this is a beautiful venue. I walked through, it was still a little bit difficult for me to understand how any of the spend at a conference like this was translating through to something that stuck and crystallized in my mind. Whereas if I saw the CEO up here speaking, like Ave earlier, I'm like, wow, that's profound. It's coming from the heart. He means it. Okay, in terms of sales and marketing, know what you're selling, vitamin or medicine, right? Am I helping you supercharge? I'm giving you 3x on your returns, or am I solving this problem where you're about to get hacked? Founders have to be in there day in, day out. And then one other thing, and I think the last presentation was attempting to get at this, which is do you have product market fit or points market fit? Points market fit lasts for 6, 12 months. It's fun. It's like crack. It's stimulating. You're looking at it day in, day out. These metrics, my God. And then you have a bear chain, and it's boom, the period ends, and it goes down a third or half. Not just the price, but the amount of value in the chain. Don't get hooked on that like candy. You really, really want to make sure that you have mechanisms that folks are excited about. Okay, cool. I'm going too long. All right, identify your tribes. What's kind of cool, despite the little silly occasional social media arguments, I have sensed this year that we're all moving towards a tribe of, look, there's a bunch of different approaches. It might be at the L1, it might be modular. I could use all the buzzwords. But bottom line is we're getting people to build things and integrate core financial primitives and non-financial primitives into our blockchains. Let's just keep doing that. I feel like our tribe is, every one of us who's sort of pilling large companies that have great distribution to get people. And by the way, this is desperately necessary because we haven't grown the number of on-chain users particularly significantly in the last 18 months in aggregate, and it's a problem. So we definitely need to start doing that. I'm going to just rush ahead. Landing the plane. All right. We were riding the wave, and now we're coming in for a landing. All right, I've got 1 minute. Okay, so 2 big things. I'll just summarize these. So smooth it out. Startups are chaos, complete and utter chaos, and they're particularly chaos in crypto, where you have cycles, where you have immediate, like at the earliest stages, price signals. Your job as a leadership team, your job as a CFO in hiring is trying to smooth out that uncertainty day in and day out. Like it's so you're basically smoothing out emotion and trying to, so an example would be don't keep, like to the greatest degree possible. I've heard people who say like you should be chain aligned and hold like your treasury in ETH or SOL. No, like please, I pray for you. Pump.Fun is our largest portfolio company. They sell a lot of their SOL into USDC. You need to make sure that you're going to exist a few years down the road. Smooth things out to the greatest degree possible so you can deal with all the other uncertainties that come along with a crypto startup. And Pump's a good example. Find the one killer app. Obviously theirs is like I can launch a token for basically no money in a second. OpenSea did this, like, you know, list NFTs and launch NFTs. Like Polymarket did it. Hyperliquid did it. If you can find that one killer app, you can amass such a treasury in such a short period of time. Jupiter did it, such that it gives you then the treasury and the flexibility to take time to either acquire, build, buy, all of these things, build organizations, governance mechanisms to become a sustaining long-term entity in crypto, which is really, really difficult. I'm not going to get to that one. I think we're out of time, right? Okay. Hey, you know what? I'll share the slides later. Thanks all for listening. One or two questions? Yes. Yeah, so I'll do this one real quick. Okay, so right now we have a massive thing that's happening, a massive shift between token and equity. Equity does have value, guys. Equity does have value, guys. We're valuing it as venture capitalists. We've invested directly into equity. We've seen now Privy exit to Stripe. We've seen Bridge exit to Stripe. We're within our portfolio, we have 4 companies in equity exits at the moment at Six Man Ventures. There are large acquirers who are valuing equity. So please think about, and what that means, this revenue meta, the way that equity is valued is typically, is this a profitable company? What does the ARR look like? And what is the upside? So please, and I think what equity having value means is that it kind of decreases the pressure on launching a token prematurely. And I think many projects and protocols have launched tokens too soon, too early, and it's harmed them. I think the fact that you can think in the back of your head that equity has value might give you a little more breathing room on the on when you might want to launch a token and being a little more patient before you do it. Yeah, one tip. I would say genuinely, it's so know that you're constantly doing 2 things. Your 3 things: shipping, selling, and recruiting. Like you should be spending all your time doing that in the first like year of being a founder. A third of the time hiring, third of the time shipping, and third of the time selling. I mean, it varies, but something like that. Those 3 things.